Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Tim McCourt, Global Head of Equity Index and Alternative Investment Products at CME Group, to discuss contract size change on VOLQ futures and what that means for investors. Tim, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. Always a pleasure to be here. Looking forward to our conversation today.
Let's start with a refresher on VOLQ. Who can trade it and how does it track implied volatility on the Nasdaq 100?
So when we look at futures on the VOLQ index that trade at CME, they're available to all participants that have access to our markets and have a futures account with their broker. So it works the same way in the machine, so to speak, as all the other equity index futures at CME. And when we look at what this future represents, just a reminder, the VOLQ index itself is interesting because it tracks the implied volatility of the at-the-money options, which I think more colloquially matches how we talk about volatility. And when we look at 2022, certainly lots to talk about on that landscape. So looking at how the market is moving from an at-the-money perspective, VOLQ tracks that for the Nasdaq 100 index, and we have futures on that index at CME. And just a reminder for folks, the VOLQ index uses the first two in the money and out of the money calls and puts across the four nearest expirations to give you that precise measurement of implied volatility 30 days out. So it's a really useful barometer for the market, and one that I think, again, is going to become more important as we continue here in 2022.
What's the significance of the contract size change on VOLQ futures?
Yeah, so as you might remember, we introduced VOLQ futures a while ago with a $1,000 contract multiplier, but based on feedback from the marketplace and customers, that was a little too large for the marketplace participants. So we've actually lowered the multiplier of the contract by 1/10 to a $100 multiplier. So the futures contract represents a notional value of 100 times the index, making this contract much more accessible to the marketplace of all sizes, whether you're an institution or an active individual trader. It's just an easier way to manage risk associated with Nasdaq volatility or access or deploy trading strategies that might be tied to the at-the-money implied volatility measure as represented by the VOLQ index.
And Tim, you started to offer block trading of options on E-mini Nasdaq 100 futures today, January 24th. What will that allow investors to do?
That's a great question. And I think what's interesting to note is the NASDAQ 100 index complex at CME continues to be of more and more importance to the marketplace. We're seeing volumes grow in our options, where in 2021, we doubled option volume at CME to about 35,000 contracts per day on the NASDAQ options. In the month of January, just a few trading sessions in, that's close to 40,000 option contracts per day. And Jill, actually just on Friday, we had a brand new record of micro E-mini NASDAQ futures at CME trading almost 2.4 million NASDAQ micros at CME. So the NASDAQ remains topical for traders, but we also know when institutions and larger traders are looking at the marketplace and trying to deploy some of their option trading strategies, they could benefit from block trades in addition to all of the Globex and electronic volume that they can do through the matching engine at CME. So today we introduced block trades on our NASDAQ options on futures, and the minimum quantity for those trades are 60 contracts. And just a reminder to everyone out there, these are options on futures, and we have Mondays, Wednesdays, Fridays, quarterlies, lots of various expirations to choose from as you're trying to figure out how to best manage your risk on the NASDAQ 100 index.
Yeah, great to see all this product roll out, Tim. Thank you as always for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.